Hello everyone, welcome back to Explain the Charts, where we break down the news and the charts to help you make better trading decisions. Today is November 12th, 2024, and we're taking a look at the EURUSD pair. Recent headlines are dominated by the economic outlook for the Eurozone, with concerns about slowing growth and the potential for the European Central Bank, ECB, to implement further rate cuts. The US dollar, on the other hand, remains strong, buoyed by expectations of a robust U.S. economy and a Fed that's likely to maintain its current policy stance. The U.S. presidential election, which resulted in Donald Trump's victory, has further fueled dollar strength, as investors anticipate a more aggressive fiscal policy and potentially higher inflation. These factors have contributed to a bearish sentiment surrounding the EURUSD, with analysts predicting a possible decline towards parity. However, it's important to consider the technical data on the charts to gain a clearer picture of where the market might be headed. Let's start by examining the daily chart of EURUSD. Over the past several months, we've witnessed a downward trend, with the pair breaking below several support levels. The recent decline has brought the price close to the 1.05 level, a psychologically significant level that could act as a strong support. If the price breaks below 1.05, it would suggest a strong bearish sentiment and potentially further downside movement. However, if the price finds support at 1.05 and bounces back, it could indicate a potential reversal and a shift in market sentiment. Zooming in on the hourly chart reveals some interesting price action. We can observe a series of lower highs and lower lows, confirming the bearish trend. The recent decline has been relatively sharp, suggesting strong selling pressure. However, we also see some signs of potential consolidation around the current price level, indicating a possible pause in the downward movement. It's important to watch the price action closely to see if the consolidation pattern holds or if the bears regain momentum. The 1.06 level appears to be acting as a key resistance for now, and a break above this level could suggest a potential shift towards a bullish scenario. The 15-minute chart provides a more granular view of the market's current state. Here, we can see some signs of a potential reversal, with buyers stepping in to defend the 1.06 level. The price has been fluctuating in a narrow range, suggesting indecision among traders. This could indicate a potential period of consolidation before the market decides its next move. It's crucial to monitor the price action closely to identify any breakouts or breakdowns from this range. A break above 1.065 would suggest a strong bullish signal, while a break below 1.06 would reinforce the bearish trend. In conclusion, the news and charts paint a mixed picture for EURUSD. While the fundamental factors suggest a bearish bias and a potential decline towards parity, the technical data on the charts reveals some signs of a potential reversal. Key price levels to watch include 1.05 on the daily chart, 1.06 on the hourly chart, and 1.065 on the 15-minute chart. A break below 1.05 on the daily chart would strongly suggest a continuation of the bearish trend. However, a bounce back from 1.05 and a break above 1.06 on the hourly chart could signal a potential shift towards a bullish scenario. On the 15-minute chart, a break above 1.065 would provide a strong bullish signal. It's important to remember that the market is constantly evolving and the situation can change quickly. Therefore, it's crucial to stay informed about the latest news and events and monitor the price action closely. The key takeaway is that the EURUSD is currently at a crossroads with both bullish and bearish signals present. Traders should pay close attention to the price action around these key levels and be prepared to adjust their strategies accordingly. We'll continue to monitor the market closely and provide updates in our future videos. Thank you for watching, and please subscribe to Explain the Charts for more in-depth analysis of the markets.